Hello, students. My name is Mr. James Nyaru. I'm here once again to take you on accounting under the topic company accounts. In our previous lesson, we have been discussing about the final accounts of sole trader, partnership, non-profit organizations, and the rest of them. And before I left, I told you that if we meet again, we are going to continue with the topic company account. And before we go into company accounts, we are going to define what a company is all about. By definition, a company can be defined as a business owned by an association of people and operated as a legal person on behalf of its owners with the usual motive of profit maximization. If I said profit maximization, that is making of profit. Now we are going to look at the kinds of companies. There are three kinds of companies which may be constituted or incorporated under the Companies Act. They are: 1, unlimited companies. In an unlimited company, the liability of the members for the debts of the company is unlimited. This means that the company is bound to sell all the debts, to settle all the debts it owed its creditors in case it liquidates or closes down. If the debts could not be settled due to insufficient funds, then members of the company would be compelled by the law to sell their personal belongings or possessions to settle the remaining debts. 2, companies limited by shares. This is a company whose liabilities are limited to the amount of capital invested in the business. That is, only the capital will be used to settle the debt owed by the business in terms of liquidation, while the remaining balance or debts will be borne by creditors or suppliers. In this point, limited by shares, this is the capital that was used to initiate the business. It is called nominal capital, registered capital, or authorized capital. Now, under this company, in case the business closes down, let's take, for instance, the company was started with 100 million naira. Now, it could not proceed with the operation. Since it could not proceed with the operation due to lack of money or due to bankruptcy or insolvency, what this place is saying is that if it closes down, only the 100 million naira will be used to settle those that the business is owing. Whether the business at the time of liquidation is owing 200 million, but only 100 million was used to initiate the business or establish the business, that 100 million naira is the only one will be used to settle those that are owing the business. Then the remaining 100 naira will be borne or bear by the creditors or suppliers. That is what this company limited by shares is referred to. 3, company limited by guarantee. The liability of members in the company is limited to the amount guaranteed by the members in the event of liquidation. This also implies that only a stated amount of capital invested in the business will be used to settle the debts owed by the company, while the creditors or suppliers bear the remaining debt. This one is also saying, in the first instance, I explained to you that 100 million naira was used to establish a business. And in terms of liquidation, the members or the shareholders will say, yes, we have used 100,000 to establish this business, but we are going to agree on the particular amount out of that 100 naira. Even the company is owing 200 million or 300 million. We are going to agree that we are going to pay only 500,000 naira to settle the debt of our creditors. This is the amount agreed by members or by shareholders. That is what they say, an amount is agreed or guaranteed. So shareholders will say, in terms of liquidation, let us agree. We have agreed, we initiated this business with the amount 100 million naira, but we are going to use only 500,000 to settle our debt in terms we could not operate anymore. So that is what they say, guaranteed. That is a certain amount is agreed that in terms of liquidation, we are going to use only that amount of money to settle our suppliers. So that is what they say, guaranteed. And a certain amount must be agreed by members. So even the company is owing 300 million, 500 million, that 100 million that has been agreed upon to settle the debt is the one that will be used to settle the debt. Any investor that is investing in this, type or kinds of companies, he is aware in terms of liquidation, something like this will come up. So that is it for point 3. Now we have discussed the kinds of companies. We are now going to discuss types of companies. Limited liability companies that have profit as their motive of operation are of 2 types, namely 1, private companies, 2, public companies. Now we are going to go with the private companies as our first point. A private company is defined by Section 28 of the Companies Act 1948 as a company which by its articles, before I explain, this company is formed by friends, by relations. That is why sometimes you see some company, Mary and Sons Company Limited, or Associate Companies Limited, and the rest of them. So this falls under private companies. So this is how it is being defined. Now they said, it is a company that in its articles, A, restricts the right to transfer its shares. That is under private limited liability companies. Shares are not allowed to be transferred to another person without the knowledge of the other shareholders. I'm a shareholder in a private company. If I want to withdraw from the company, I have no right just to call my friend and sell the shares to him, or call my brother and sell the shares to him without the knowledge of the other shareholders. So that is what they say, shares are not transferable unless with the consent of the other shareholders. B, limits the number of its members to 50. The minimum is 2. The maximum is 50. If the number of shareholders in any company is 50, then you need not to be told that this is a private company. The number will not exceed 50. It's from 2 as minimum, then the maximum is 50. C, prohibits any invitation to the public to subscribe to its shares. That is to say, its shares are not sold through the stock exchange market. The shares of private limited companies are not sold through the stock exchange market. The shares are just sold within the company, not through the stock exchange market. That is what they said. They prohibit at all any public invitation to subscribes to its shares. D, private company ends its name with the word limited. Anywhere you see the word limited, then that is just a symbol of a private limited company. Two, public companies. These are companies which invite the public to subscribe to their shares. The minimum number of shareholders required to form a public limited company is 7. Well, there is no maximum number. In a public limited liability company, no maximum number, but they have only minimum number. 2 million, 20 million, 300 million, even which number can be used to form a public liability company. Now they said, in a public liability company or in a public companies, there is no restriction on the maximum number of shareholders. No restriction, that is infinity. The number is infinity, no number. Shares are transferable to persons without informing other shareholders. That is to say, in a public limited liability or in the public companies, if you want to withdraw yourself from being an investor or being a shareholder, you can just call someone, sell it to him, and go. That person will introduce himself or will carry on with the business with the other shareholders by notifying them, I have acquired shares from so person, and that's all. Unlike the public limited, the private company, whereby shares are not sold like that. Shares are transferable to persons without informing other shareholders. The name of the public company must end with the abbreviation PLC or the word public liability company. Public liability company. This type of company is formed both with the private and the government. The government normally have majority shares in this type of company. And that is why sometimes the government control the affairs of public companies because they have the majority shares in the company. Then we have the characteristics of limited companies. Characteristics of limited companies. 1, legal entity. When we talk of legal entity, that is a company as an artificial personality can sue and be sued, can sue and be sued. Its personality is distinct from the owners. In the eye of the law sees a company as an artificial person. Though being artificial, it cannot work, but it can talk. It can operate. It cannot move from one place to another, but it has some certain things similar to that of human beings, or characteristics similar to that of human beings. That is why they say it can sue and be sued. Let's take, for instance, how can a company sue a customer? I'm a baker, or we are producing bread. We are baking bread, and a customer acquires that bread just only to go telling people that this company is producing goods that are harmful to human consumption. The lawyer is there. The company has its own lawyer. The company will send its own lawyer to go to court and seek for redress. If the allegation is true, then the company will bear. And if the allegation is not true, then damages has to be claimed by the company because it is an allegation that is aimed to truncate the operation of the business or to bring the business or to pull the business down. the business will sue you. That is why they say the business can sue and be sued. Conversely, or on the opposite, if that bread actually bought by that customer, and truly, on eating that bread, he discovered a dead flies inside that bread, and he took that bread to court. You see, now the company is now sued. If the allegation happens to be true, then that customer will claim damages. Not the owners, not the shareholders, but it is the company which is operating as an artificial human being. And again, in this point, I would like my fellow, or I would like business people, most especially those that have started business for long, but in the end, they could not succeed. This place is also telling you, don't make the company or the business that you have set a personal belonging. Act separately from the business. Let's say, for instance, your father came or visited you. Anything you serve your father, make sure you pay. Anything you serve, or your mother that visits you, anything you serve to your mother, pay it. Or if you don't have the money as at that time, write it. In accounting, we call it drawings. This will fall under drawings. But once you have converted your business as a personal property, anytime you are going for marriage, you just draw your drawer, remove the money from the business, and go. Funeral, burial, you remove the drawer, take the money. Wedding, you remove the drawer of the business and take the money. The money is going. It's not coming back. You have made it a personal. It will reach a certain point, or it will reach a point whereby you will not even have the money to go and buy the raw materials and continue with the business. So you have to act separately from business. That is why they say it is a legal entity, separate from its owners. Point 2, limited liability. The liabilities of members is limited to the amount invested in the business. Yes, only the capital. Members, how much you contributed, how much you bought the shares. I bought the shares, 500,000, this one 300,000, this one 400,000, this one 700,000, this one 800,000. In terms of liquidation, or that business closes down, individual money contributed or individual money used to acquire the shares, is that amount of money will be used to settle the debt. The debt has a boundary. That is why they say limited liability. And that boundary is the shares. The liability or the debt will never pass on to your personal belongings. Unlike sole proprietorship, unlike partnership, when it closes down, they have to pay all their creditors. Even if the assets are not enough to settle the creditors, they will call themselves together and share the remaining debt and what? And settle the creditors. Number 3, perpetual existence. Perpetual means everlasting. Perpetual means infinity. Perpetual means no end. Such business, if they start operation, they don't have end. So the ownership of the company can change hand without changing the company. This will enable it to operate continually from ages to ages, no end. Then number 4, it is authorized by law to carry on a specific line of business. You need not to be told. If you go to these companies, you see they produce only one product. Unlike a sole proprietor, he is selling orange. You see a table for orange is here, a table for banana is here, a table for beans is here, a table for rice is here, different types of what? Varieties. And at the same time, he or she is a tailor. It's not like that with the limited companies. If they are producing trousers, it's trousers. Then differences between private and public companies. We are going to look on the debit side, it's tabulated. On the debit side, we have private company, on the public, and on the credit side, on the right-hand side, we have public company. 1, it is formed by private individuals. 2, it is formed, that is public. It is formed by both the government and the private individuals. 2, the minimum of shareholders is 2, and the maximum is 50. Well, that the public is the minimum number of shareholders is 7, and no maximum to its number. Okay. Then private shares are transferable, like what I've just explained recently. Shares are transferable. Then public shares are not transferable. Number 4, prohibits any invitation to subscribe to its shares. Then, while the public, no prohibition to public invitation to subscribe to its shares. No prohibition at all. Then number 5, it ends its name with the word limited. Then public, it ends its name with the word public limited company. You can see here PLC, and that of the private, you can see limited. Then summary. A company is defined as a business owned by an association of people operated as a legal person with the motive of profit maximization, that is profit making. Then we also discuss kinds of companies, and which include unlimited companies, limited by shares, and companies limited by guarantee. More so, the characteristics and the differences between private and public companies were discussed. Students, I will not leave you without giving you an assignment, or without giving you assignment to do at home. Pay attention and listen to the questions. 1, what is a company? 2, what are the characteristics of limited liability companies? 3, differentiate between private and public liability companies. I repeat again. 1, what is a company? 2, what are the characteristics of limited liability companies? 3, differentiate between private and public liability companies. Students, we have come to the end of our lessons. And then reference, where at least you can get this very well and vividly. Check your textbook, which is Essential Financial Accounting for Senior Secondary School by O.A. Longe and R.A. Kazim. I repeat again, the reference, Essential Financial Accounting for Senior Secondary Schools by O.A. Longe and R.A. Kazim. I believe we have come to the end of today's lesson. My name is Mr. Jameson Yaro, and in case you want more explanation in some gray areas, you can contact me for more explanation through this number, 090-4695-7453. I repeat again, 090-4695-7453. Stay home, stay safe, keep on learning. See you again. Goodbye.